All right, let's talk about what an ICO is. This is going to be the beginner's guide to understanding what an initial coin offering is. It's going to be very similar to an IPO, which is going to be when a stock gets pretty much announced and available to the public in order for trade. Okay, so let's jump into it. So, what is an ICO? An initial coin offering is a fundraising method used by companies to raise capital for their projects. It's essentially the cryptocurrency's world equivalent of an IPO, also known as initial public offering, where a company issues shares to the public. Okay. So if a company decides to get started, say I started StackMODE and I issue shares to the company or issue shares to the public for my company, then that's going to go ahead and be an IPO. Okay. And an ICO, a company issues its own new cryptocurrency token. So say I started StackCoin. Okay. For instance, say I issued that in exchange for other established cryptocurrencies like Bitcoin or Ethereum, for example. I'll use this as an example. Okay, not actually starting an IPO or ICO. And the core idea is to crowdfund a project by selling a small portion of the future currency or tokens to early supporters and investors. So how does an ICO work? One, an ICO works by one, having a white paper. And a white paper is going to be pretty much the cryptocurrency's legal version of the document. It's going to entail how it works, okay, the roadmap of the cryptocurrency, and what its uses are going to be used for. Okay, so typically by the time something has a white paper, it's already pretty official and people are going to be interested in it. And it might even have a team behind it of investors, okay, ready to go ahead and push this out to the brokers such as Coinbase, Phantom, so then the public can go ahead and purchase it for their currency or exchange it for other cryptocurrencies that they already currently have. And a white paper is a technical document that outlines the project's purpose, technology, team, tokenomics, and the roadmap for its development. Let's talk about token creation. A new cryptocurrency token is created on an existing blockchain, most commonly Ethereum, and as an ERC20 token via a smart contract. And the company sells these newly created tokens to the public in a designated fundraising project. And funds are collected in a smart contract and are often held in an escrow to ensure project milestones are met. And after the sale concludes, the new token is typically listed on the cryptocurrency exchange, allowing investors such as me and you to trade it. Okay, so that's how the process works of a cryptocurrency getting listed onto brokers such as like Coinbase, Phantom, and any type of things like that, etc. And key terms to know. So once again, the white paper is going to be the official document that entails what the cryptocurrency does, its roadmap, and pretty much what it does for the future and the logistics behind how it's created. And just like the Bitcoin is created by POWs, okay, it's created by a bunch of computers. So the white map is going to go ahead and entail how Bitcoin is going to go ahead and be created, something like that. Okay, so whatever the cryptocurrency is created, if it has a white paper, it's going to detail the project's information, it's going to detail its roadmap, and it's the most crucial resource for its due diligence. Let's talk about what a token is. And a token is a digital asset issued in the ICO. It can represent a utility, access to a service, whether it be at art or something like that, or give you just a share in the project. Okay, so you can make some money. And a smart contract is a self-executing contract with the terms of agreement directly written into code. It automates the distribution of tokens and the collection of funds during the ICO. And tokenomics is the economic model of the token, including supply, distribution, and how its value is intended to be maintained. So let's say, for example, tokenomics of Bitcoin, okay, is going to be important to know because you're going to need to know that there's a limited amount of Bitcoin, okay? So knowing the value of Bitcoin, knowing that it's a limited resource, is going to be involved in the supply distribution piece of it. Okay, so knowing all the information and what cryptocurrency you're going to be trading into, or whatever you want to invest in, or if an ICO is going to be worth your while, I would definitely look up the information, know the white paper, and do your research before putting your money into anything. Once again, not financial advice. So the appeal for companies. ICOs offer several compelling advantages for startups and projects. making them a popular alternative to traditional venture capital VC funding. Why? Because one, when you're able to use cryptocurrencies such as Bitcoin, Ethereum, stuff like that, ICOs allow a company to raise funds from a worldwide pool of investors. And because you're not being held down by the middleman traditional bank system, okay, and through cryptocurrency, now that you have the peer-to-peer system on the decentralized network, which is a network, which means that pretty much no banks can hold up any type of bread. So if you decide to send $1 billion from one person to the other, if as long as you have the right wallet address, they should go ahead and get that money, and everyone's gonna have the smile on their face and show up. Okay. So without the geographical limitations of traditional fundraising, so you don't just have to get funding from people who have the same type of currency as you. Okay. As long as you have the cryptocurrency, then you're going to be able to go ahead and use it. So you're not just going to be able to get money from USD if you're in America, or from yen if you're in China, or something like that. Okay. Or yeah, whatever currency it is. You guys know what I mean. But yeah, so building a community as well. By involving the public in the fundraising process, a project can build a dedicated community of early adopters and supporters who are directly invested in success. Okay. So you can also get the public involved into it too, to go ahead and help you send some cryptocurrency over. And it's going to pretty much build a community around the crypto who believe in its future. And that's typically how the crypto community goes. Okay. Seeing how people can make the future better. Ideally, it's a group of people who really do care about the environment and stuff like that. Say people who made Ethereum, for example, knew that Bitcoin mining was an issue and that Bitcoin was going to go away. So Ethereum had to get made and staking was created. So POWs don't have to be the method for creating the Bitcoin for all the times. So it's really just about knowing what you want to invest in, seeing if it has a future, and seeing if you want to put your money into it. Let's talk about why people invest in ICOs. Investors are drawn to ICOs for the potential of high returns and the opportunity to be involved in innovative projects from the ground up. High potential returns. If a project succeeds and its token is widely adopted, the value of the token can increase significantly, offering early investors substantial profits. Okay. So once again, if its future is being spread out to the public and people are like, whoa, this has some use, I'm going to go ahead and invest into this, then you're going to be able to go ahead and make some really good money based off of that information. And early access. Investing in an ICO provides a chance to get in on the ground floor of a new project before it's widely known or the token is available on public exchanges. Okay. And supporting innovation. Many investors are driven by the desire to fund and be a part of a decentralized blockchain-based future. Okay. A lot of influencers, just big investors, handful of managers, people are just looking to start either a firm or start some type of coin. Okay. But don't just buy any coin on the block. I recommend you guys do your research, see if it has any future value, and then make your decision based off of that. Pray to God on it, sleep on it. Okay. Just take your time on making all these decisions. Don't just hop in without doing your research. And risk and considerations. While potentially rewarding, ICOs are also highly speculative and come with significant risks that investors must be aware of. One, lack of regulation. The ICO market is largely unregulated, making it vulnerable to scams, rug pulls, and fraudulent projects. Okay, and what a rug pull or fraudulent project is, it's pretty much going to be a team of people. Okay, they all come together, they pay for ads, okay, and they either hack or pay influencers to go ahead and then promote the coin. Okay. So let's say they're promoting a scam coin. Okay. Then they're going to go ahead and want the public to go ahead and get into it. They're going to say that scam coin is going to be one of the greatest things ever, even though it's not going to be true. And then boom, people are going to go ahead and get in. Meanwhile, 80% of the shareholders, a lot of the times, and you can check to see what percent of the shareholders are a part of the coin. So you'll see like 80% of the shareholders, and at the bottom, by the time you invest at all-time highs, they're just going to go ahead and sell. And since they're in at the bottom, they'll make a bunch of profit, and then the whole stock will crash. Okay. And many ICO projects fail to deliver on their promises or simply never get off the ground. And the funds raised can be lost forever. Okay. So be careful for rug pulls. and be careful for certain project failures, such as people quitting, not giving a prominent future, or the coin not having enough funding for its future progresses. Let's talk about the evolution of ICOs. The ICO landscape has evolved since its peak. Stricter regulations and a higher rate of scams have led to decline in popularity. They have largely been succeeded by other fundraising models like initial exchange offerings, IEOs, and security token offsprings, STOs, which often provide greater investor protection and regulatory compliance. And an ICO is a powerful yet risky tool for fundraising in the decentralized world. Once again, this decentralized world is going to be an area where there's no middleman, no banks involved unless you're withdrawing, and just sending your money from one person to another, also known as the peer-to-peer transaction system. And understanding the concepts, risk, and benefits is essential for anyone considering participation. Always conduct your thorough due diligence, and remember that high potential returns often come with high risk. Okay? Stay prayed up to God. Don't lose yourself whenever you guys get profitable. Put a percentage of your income away for taxes. Okay? Save your money, reinvest it, don't blow it all, and go to stackmode.net for trading education. Okay? Catch you guys in the next one. Peace. Stay prayed up to God and keep grinding.